Hello, everyone, and welcome to the 2025 DI Property Tax Requisition Webinar. I want to start by thanking the AM TPA for partnering with us to hold this webinar. We previously held a couple of these in 2019, and we felt it was time to do this again. My name is Ken Anderson. I'm the Manager of Finance and Administration in the Assessment Services branch, which includes the responsibility for the DI Property Tax Requisition, amongst other things. Assisting me today from the branch is Joshua Hedatunji, Program and Policy Advisor, and Mary Arifa, our Stakeholder Relations and Communications Advisor. They are monitoring the chat for questions, and they'll be providing me some great assistance. So let's begin where we fit in municipal affairs and the GOA. So obvious as indicated, we belong to the Municipal Affairs Department or Ministry, but more specifically, we are part of the Municipal Assessment and Grants Division. So we're broken into basically three separate branches, and that is Grants and Education Property Tax, which looks after our grant programs, our assessment audit, education property tax, equalized assessment. And then there's our assessment property tax policy, and they do all of our assessment and tax policy. So that's things like the assessment model review, the various ministers' guidelines, the linear, the M&E, the quality ministers' guidelines, etc. And then we have the assessment services branch, which is the one that we belong to, and we do the designated industrial property assessment. And of course, there's many supporting functions that go along with that, with one of those being the DI requisition, which we are focusing on today. So we'll start with what is designated industrial property. So designated industrial property is defined in the Municipal Government Act, and it is facilities regulated by the AER, the AUC, or the NEB. Linear property, property designated as major plants by regulation, land and improvements on a parcel of land that contains facilities described above in subclasses I or III, and land and improvements where the leasehold interest is held and the land is not registered in the Land Titles Office and contains facilities described in subclauses I or III. So why is designated industrial property assessed by the Assessment Services branch? Well, it all started with a comprehensive review and consultation of the Municipal Government Act. The resulting amendments expanded the role of the department and as well as our branch, and that was to include centralized assessment of a expanded group of properties described as designated industrial property. And these properties are assessed on a cost recovery basis, hence the DI requisition. So this is a quick overview of our 2024 AY, or assessment year for 2025 taxation. So our scheduled dates for our 2025 annual notices were January 31st, 2025 for our linear properties and February 28th, 2025 for our industrial properties. And our DI property requisition was mailed out March 31st of 2025. Our total taxable provincial DI assessment for 2024 AY was $211.3 billion. That was $93.3 billion in linear and $118 billion in industrial. That translates to approximately $2.1 billion in municipal tax revenue and $418 million for the Alberta School Foundation Fund. So this is a look at our annual operational schedule and timelines for 2025. So as you can see, all the ones that are crossed out are things that have already been completed. So that's our linear notices, our auditor letters, our reconciled DI requisition, our industrial notices, the 2025 DI requisition as well as our A1, which is our first amendment, and our major cost reporting RFI. So we have a number of things still going on. We have another RFI going out August 18th. We have an A2 scheduled for September 8th. Another RFI for linear being sent out September 15th. Our linear industrial A3 for November 10th. And another one again on December 8th for our supplementary amendment notices. And then a sub A1 on December 15th if necessary. As well, we have our well drilling activity reports, mailing address updates, and our ASP newsletter, which is sent out quarterly. We're going to hold off questions until the very end. We have a number of questions that have come into the chat, and we'll address those at the end of the presentation. So now we're going to get into the DI property tax requisition itself. So the cost of assessing designated industrial property is recovered by way of the DI property tax requisition rate. The tax rate is set by the Minister of Municipal Affairs through a ministerial order. And this tax rate is applied by municipalities to the DI property owner's tax bills and cannot be changed, adjusted, or modified by anybody, by municipalities. So we just want to make sure that everybody understands that there is no over or under levy similar to what education taxes does, because education taxes, it's the requisition that is set as opposed to the DI requisition where it's the tax rate that is set. Any adjustments are done through our reconciliation, which we'll talk about a little bit later, and that is sent out at the end of the year. This DI property requisition annual notices, as I indicated, we mailed out in March of this year, and that's the approximate time frame that we'll do it every year, approximately the end of March every year. So how is the DI property requisition tax rate determined? So we take the costs incurred by the assessment services branch or our budget to prepare the DI property assessment. That is divided by the total provincial DI property assessment, which also, you remember, includes linear property and industrial property. So it's a combined total, which we've seen in the previous slides was about $211 billion. Then that's multiplied by 1,000, and that equals a uniform tax rate to be applied to all DI property. Now you might ask, why do we multiply it by $1,000? Well, the first year that we did this, we had an 8-digit or 8 decimal point number, and that was difficult for many municipal financial systems. So what we did is we multiplied by 1,000 to take it down to 4 decimal places, which made it much, much easier. So that's one thing to remember, is that when we send you the rate, that it is per $1,000 of assessment. So here's some historical property requisition tax rates from 2021 to 2025. So as you can see, over these 5 years, we've remained fairly consistent. This year, of course, being much lower, and that was due to a fairly good increase in the assessment, with our costs remaining fairly consistent. So what is the role for municipalities? So the first thing that you need to do, or that you'll get, is you'll receive the DI property tax requisition, which is sent out on the last business day of March, annually to all CAOs. Ensure that your designated industrial property requisition tax rate is included in your annual tax rate bylaw. This is very, very important. Apply the tax rate to all taxable designated industrial properties. Also make sure that this tax rate is a separate line item on your DI property owner's tax notice. Then send your tax notices, and then collect and track your payments. Then send that money into the government of Alberta on the applicable due date. So the applicable due date for municipalities is 30 days after your municipal due date. So for example, if your taxes were due June 30th, then your due date to remit your DI property requisition total to the province would be the end of July 30th, July 31st. Now we're going to get into requisition cancellations. So there's 2 areas of cancellations. One of them is the provincial education taxes, and the other is the DI property requisition, and they're commonly known as HERC and DIRC. So when do these cancellations or reductions apply? So the property tax credit guidelines allow municipalities to apply for reduction or cancellation in the following cases: when you have uncollectible education property taxes for oil and gas properties, or uncollectible, uncollectible DI property requisition taxes for all designated industrial property. So the application process and timeline. So how do you apply for these? So the guidelines and application process is available online at the link that we've included here. It's property tax credit guidelines. If you punch that into any browser, it should come up, and all of the applicable processes to apply for a property tax credit is located in there. The deadline for applications is January 15th annually. All submissions are also reviewed for accuracy and completion. And the reason that we do that is we have found a number of errors. The common errors that have occurred is that the addition for the columns isn't accurate. So in other words, not all the column is added up. And another thing is the wrong tax rate being used for the wrong year. So you got to make sure that you're using the 2020 tax rate for any 2020 claims, the 2019 for the 2019 claims, so on and so forth. And you can claim those all in one application, but just make sure that you have the proper tax rate applied to each one of those. Approval for the designated industrial cancellations are approved via ministerial order by the Minister of Municipal Affairs, and a copy of the signed order and approved totals, once they're complete, are sent to CAOs. So what other circumstances do cancellations or reductions apply? So if the total DI requisition amount for municipality is under $1,000, it is automatically eligible for cancellation and does not need to be remitted to the province. The funds collected are retained by the municipality, and no reason to send those into us. The requisition tax rate must still be applied to the DI property owner's tax notices. Regardless of whether or not it's over or under $1,000, you still must apply it to the tax bill, but you get to keep those funds. You don't have to send them in if it's under $1,000. The cancellations are reflected on the DI notice sent to municipalities in March. So it'll show up as a zero balance if you have a under $1,000 requisition. It'll show as a zero balance, but again, still make sure that you apply that to the DI owner's tax notice. You get to keep that money as a gift from the province of Alberta. So that concludes our presentation. I know we've had a number of questions that came up, and I'm going to address those questions now as we go along. So one of our first questions we got was from the city of Edmonton. And it said, you talked about aligning linear and industrial timelines. Other than that, do you anticipate any significant changes to these timelines in future years? No, we don't expect any significant changes to our timelines. Our legislated date is February 28th. And for our annual notices, we must meet that date. We currently send out our linear notices on or before January 31st, and our industrial notices on or before February 28th. If we were able to combine these into a single mailing, it would likely fall somewhere in between those two dates. Our second question is people are asking if we can provide a copy of the PowerPoint presentation because they missed most of the presentation. We said yes, the PowerPoint presentation as well as this recording will be posted on our website, including all the question and answers, and a link will be provided to the AMTPA to send out to all members so that they can view the presentation. So our next question is from the city of Brooks. It says, can you talk about assessing internet or fiber? We are currently in a partnership, independent company for a broadband project with the entire city. And it's my understanding you don't assess it because it's not serviced by large companies, TELUS, Rogers, etc. So we won't be able to get any tax revenue for this project. Yes, you are correct on that. So currently, the equipment for internet resellers does not meet the definition of linear property in the same way as the larger telecom providers' equipment does. This would require a change in legislation to make this happen, and from what I understand, that is not being entertained at this time. Although any building and structures that this equipment is located in is accessible, just not as DI property, and it would be assessed by the local assessor, not the provincial assessor. Then I also got asked a similar question to above. Could you share the answers with AMTPA to forward to the group? Yes, as I answered previously, all of the questions in the presentation will be in the recording, and we will also post the presentation slides as well. Any thoughts on removing the assessments of DIP and linear properties that are in receivership or bankruptcy and no longer collectible? At this time, the legislation requires us to continue to assess these properties if they're operating. I know a lot of work is being done around unpaid oil and gas properties with the province and our stakeholders. And maybe something more will happen in the future in this regard. But right now, we must follow the current legislation, which says that we have to assess these properties. But we do feel your pain. Just to confirm, would you only provide supplementary assessment if a municipality has passed a supplementary bylaw? We would have to provide that to you in order for you to do a supplementary assessment for our municipality. Yes, that is correct. If you pass a supplementary bylaw, please be sure to notify us as soon as is possible so that we can issue any supplementary assessment for your municipality. Next question we got, and I believe this was from the City of Edmonton. How are we able to determine the location of DIP property based on the notices received from the provincial assessor? And the answer we got for that is, if you're referring to telecom, they really don't like us to display their locations on their notices for confidentiality reasons. It's a very competitive industry, as you can understand. Another scenario is if you were referring to fiber or coax or the cable roll-up inventory, those don't have a set address, obviously, because they're located in multiple locations across the province, and they're bundled up into one larger group and assessment number. If you would like to find out more about this, please reach out to our office, and we can have a linear advisor speak to you about this in more detail, and they may be able to give you some of that locational information. City of Edmonton, I noticed that your date for sending subs is December 8th. Is there any way you can send this out any earlier, as we close off our roll in November? So that makes it a little difficult on us. Yes, currently we have a scheduled date for December 8th, and we endeavor to get this out as soon as possible. It sometimes comes down to reporting and us trying to get the required information to get this these properties on the roll. We have introduced some early RFIs to try to help with this, and we'll make every attempt to get this out earlier if possible in the future. So I think that's all the questions that we had. Mary and Joshua, did I miss any questions at all?
I don't think so. I think you answered everything. Yeah. All
right. Thank you very much. All right. So everybody, that is concludes our presentation. Again, I want to thank the Alberta Municipal Tax Professional Association for partnering us for this webinar. I think it was long overdue. Just a reminder again, we will be posting this on our website, and we'll send the link to Alyssa with AMTPA in order to send out to you guys, so you can view this at any time. As well, all the questions will be on there. If you have any further questions, certainly feel free to reach out to us anytime. Our email address is here on this slide, ma.asbcia@asmt.gov.ab.ca. And I want to thank you again very much, and have a great summer, everybody. Thank you.